Welcome to the Deep Dive. Today, we're getting into Palantir's Q2 2025 earnings. They just dropped on August 4th, and these results are definitely making some waves.
Yeah, there's always a lot of buzz around Palantir, isn't there?
There really is. So our goal here is to pull out the key stuff from these numbers. We want to figure out what's really behind Palantir's growth, in government and commercial, and what does it all mean for their place in the whole AI and data world. By the end, you should have a much clearer view of, well, what this all signifies.
Exactly. We know you're curious about what's beneath the headlines. So let's try and connect those dots for you from the raw figures to the bigger strategic picture for this pretty unique company.
Okay, let's dive in. The headline number, the one grabbing attention, roughly $1 billion in total Q2 revenue. That's the first time they've ever crossed that billion-dollar quarterly threshold. And it's a, 48% jump year over year? Huge number.
It really is.
So beyond just being big, what's the strategic meaning? Hitting that billion-dollar mark, what does it really signal for Palantir?
Well, crossing $1 billion in a quarter, it's not just about size. For Palantir, specifically, given their history with those, complex, sometimes secret government deals.
Right, it's the high-touch stuff.
Exactly. This validates their move towards a more product-focused strategy. It shows their platforms, like Foundry and Apollo, can actually scale to the wider commercial market. It sort of answers that long-standing question, doesn't it? Can they grow beyond that government niche? This suggests, yeah, they can do both depth and scale.
That's a good point, answering the skeptics. And if we look closer at where the money's coming from, it gets even more interesting. U.S. business revenue almost doubled year on year, $306 million. Government sales also strong, $426 million, up 53%. Still about 42% of the total.
A pretty healthy mix still.
Yeah, but the real eye-opener, I think, is the U.S. commercial revenue. It jumped 93%, 93%, driven by large enterprise deals.
Huge acceleration.
So the question is, can they keep that pace up on the commercial side? Does it maybe stretch them thin, considering how important those government ties are?
That's the balancing act, right? But I actually see it as leveraging their strengths. Think about it. The kind of complex, secure systems needed for government work.
Often way beyond typical commercial needs.
Precisely. If your platform works for the Pentagon, it can probably handle a Fortune 500 company's needs pretty well. So that explosive U.S. commercial growth, it suggests their AI platform, AIP, is really hitting the mark with businesses that want to, actually use AI, not just talk about it.
Makes sense. They're adapting those sophisticated tools.
Well, right. The challenge is just managing resources effectively across both sectors. Sales efficiency is key there.
Okay, so strong top-line growth, but it's not just about revenue, is it? It's about profit, too. Long-term health.
Yeah.
And here's where Palantir's Q2 gets really interesting, I think. GAAP net income was $326.7 million. That's way up from last year's $134.1 million.
A substantial increase, yeah.
GAAP EPS was $0.13. Adjusted EPS, $0.0216, and that beat the consensus estimate of $0.14 by about 14%.
And that adjusted beat is significant. Just quickly, for anyone listening, GAAP is the standard accounting, includes everything like stock compensation. Adjusted figures usually strip out those non-cash items to give perhaps a clearer view of core operations. So beating on adjusted EPS shows strong underlying performance.
Good clarification.
And what's fascinating, like you said, isn't just the growth, but how profitable it is. Look at the margins. GAAP operating income, $269.3 million. That's a 27% margin.
Pretty solid.
Very solid. And adjusted operating income, $464 million. That's a 46% margin. That shows really, really efficient operations, even while they're expanding fast.
Wow. 46% adjusted. And the cash flow numbers back that up too, right? Cash flow from operations, $539 million, a 54% margin. And free cash flow even higher, $569 million. That's a 57% margin. That's just generating a ton of cash.
It really is. And this points to their financial strength. They're sitting on, what, $6.3 billion in cash?
That's $6 billion.
And, crucially, no debt. Think about that. A debt-free balance sheet, plus throwing off that much free cash. It gives them incredible flexibility. They can invest heavily in R&D, maybe make strategic acquisitions, expand, all without needing outside money.
Right. No need to worry about capital markets or interest rates nearly as much.
Exactly. In a fast-moving field like AI, that kind of independence is a huge strategic edge.
Okay, so strong performance, strong finances. Let's talk guidance. That always moves the needle. Palantir didn't just meet expectations here. They raised their full-year revenue outlook. And this is the second time they've done it in 2025.
That's a strong signal.
The new range is $4.14 billion to $4.15 billion. That's a big jump from the previous $3.9 billion,
Yep.
and well above what analysts were expecting, around $3.90 billion.
Yeah, raising guidance twice in a year like that, it tells you management is seeing really strong, sustained demand. It suggests the momentum isn't fading. If anything, it might be building faster than even they expected a few months ago. It points to a robust pipeline, new deals, expansions with current clients.
Okay, so let's connect the dots then. What are the engines really driving this? We've touched on them, but let's summarize. First, clearly, that commercial AI momentum. The 93% jump in U.S. commercial. Those big enterprise deals using AIP.
Absolutely, Keith. That's the scaling engine.
Then, on the government side, there's this huge potential deal looming, the U.S. Army's Titan program. Reports mentioned maybe $10 billion over 10 years.
Yeah, that's a massive potential anchor contract. Mobile AI for the Army.
So how do these two pieces fit together, the fast-growing commercial side and these potentially huge long-term government deals?
I see them as complementary. The commercial side, especially with AIP, shows they can take their tech mainstream, grab lots of new customers, prove scalability. That's rapid expansion.
Tech.
The Titan contract, if it lands, that cements their role in high-value, long-term defense programs. These are often very stable, high-margin relationships. Think of them as anchor tenants.
So two different types of growth fuel.
Exactly. Two sides of a powerful strategy. And, another way to look at this overall picture is their Rule of 40 score.
Ah, yes, the Rule of 40.
They hit 94%, which is, well, it's remarkable.
Okay, remind us, Rule of 40 combines revenue growth and profit margin, right? What does hitting 94% actually tell us about Palantir? Why is that so impressive?
Right. It's revenue growth rate plus profit margin. And getting anywhere near 40% is considered good for a SaaS company. Hitting 94%. It's almost off the charts, especially at their scale. It suggests their underlying business model is incredibly efficient. Like once they land a customer, the platform is sticky, it expands, and it generates very profitable revenue over time.
It's a great unit economics, basically.
Seems like it. The insight here is how they've blended that high-margin government base with this booming commercial growth without sacrificing profitability, in fact, enhancing it. The big question now is, can they maintain that level of efficiency as they get even bigger? That's the challenge that comes with this kind of success.
A high-class problem to has me.
Yeah.
So let's try to summarize. Bottom line, Palantir beat expectations. Top and bottom line.
Check.
They raised their guidance significantly for the second time this year.
Also check.
And it all points to really strong, sustained demand for their AI and data platforms from both government and commercial customers.
Absolutely. And as we discussed, that strong free cash flow and no debt, it puts them in a great position to keep investing heavily, which they need to do in AI. But there's always a but, isn't there?
Usually is. What's the caution here?
It's the valuation. The stock's trading at, well, over 80 times forward sales. That is very high.
Okay, 80 times. That's pricing in a lot of future growth.
Exactly. The market clearly expects them to maintain this incredible momentum and AI leadership. But it also means the stock is vulnerable. Any slip up in execution, any miss on guidance, even just a broader market downturn or macro headwind, it could cause significant volatility for you to think about. At this valuation, they basically need near-perfect execution quarter after quarter.
That's a critical point. High expectations demand high performance. So quite a deep dive today into Palantir's Q2. Impressive growth, strong financials, clear demand drivers.
Yeah, hopefully this gives you a clearer picture of how they're expanding from those government roots into the wider commercial world. It's a real evolution happening.
Definitely. So as we finish up, here's something for you to consider. Given Palantir's amazing performance, but also that sky-high valuation, how will that balance play out, between their deep government ties and this surging commercial AI business? How does that shape their future stability and path in this complex world? And maybe think about the implications, too. A company so intertwined with defense and intelligence, now rapidly expanding into the everyday commercial world. What does that mean for its business, its perception, and maybe even for you? Lots to think about there.